Well, it's all Christmas cheer here on Trading Hour. Hello and welcome to the show. I'm Sonia Shenoy. With me is Pavitra Parekh and Sonal Boosra. As you can see, we are bright and cheerful in our Christmas festive colours. But so is the market, bright shade of red. I think Christmas belongs to the bears today, right?
This is for after a long time that I'm seeing that. Usually we talk about Christmas rally, but today we are saying that yes, Santa's come to town with a lot of red.
And Santa's perhaps lost his way somewhere along the line and hasn't reached Dalal Street yet. But let's find out. We have a guest joining us. First up, Rohit Srivastava, founder and strategist at IndiaCharts.com is with us. Just to apprise you of the market, it's a steep sell-off that we're seeing in trade this morning. In fact, the Sensex is now down over 560 points and it's almost a 190-point slide on the Nifty as well. Rohit, thanks a lot for being with us and greetings of the season to you. Wanted to first start by asking you whether, now this key level of 18,000 has been breached on the downside. What's the next level to watch? And do you see this sell-off exacerbate?
Yeah, season's greetings. And I do think that the top that we have seen is probably an important one that will stay for a while. So I don't think we are going to run off to new all-time highs anytime soon, which means that even the breakdowns that we are seeing, and specifically the 18,000, 18,100 range, which is the trend line from the bottom that we made in October, is an important breakdown level because it sort of breaks the entire trend that had been going on since June, and I think that sets the tone for what might lie ahead. So, in the very short term, though, I think we may get to a point where, there's support coming in at the 20-week average, which is at 17,845. Unless we really close below that, probably into the year end, you could get some kind of a bounce back because typically volumes dull out, a lot of traders are away. So a lot of the selling may, end up being complete today. And it is possible that you get a year end, bounce or rally into the month end and probably early part of January. But my sense is that we'll still make a lower high and probably end up going down again and need to be open to further downside. Now, if we do somehow end up closing below 17,845 for today because it's the weekend, it would signal a continued sell-off towards 17,000. But my first sense is that probably won't happen. I think you will get a pullback from here as the sell-off gets to a short-term oversold condition.
Okay, we might get a pullback from here. Rohit, hi, good morning and thanks for joining us. This is Pavitra. What are you making on the Nifty Bank? Currently at around 41,900. We've seen a little bit of a correction come through in the PSU stocks over the past week. What is the kind of targets that you're working with for the Nifty Bank? And if you can also specify for the PSU banks within the space?
So the immediate support for the Nifty Bank Index is going to be around 41,840. We are pretty much there right now. If we don't hold that, maybe we dip further then towards around 40,800. I think on a broader basis, I think you can go below 40,000 eventually. The PSU Bank Index also, I think it's been a strong rally. But the kind of volumes you've seen, usually when you get such a feverish volume rally, once it completes, which I think it has now, you don't really surpass those highs for several months to come. So whether we call it a correction or whether we call it a consolidation, I'm not seeing new highs in the PSU Bank Index for quite some time.
Okay, so no new highs in the PSU banking index. In a scenario like this where the signal is that yes, it could be bearish, any space where an investor can go and hide or any trader looking at any of these specific sectors, Rohit?
So I'm expecting a very broad-based decline, which means I don't think there will be positive performance from any sector. You can only look for relative performance. And in relative performance, the only place that you might look at is Pharma. Now, Pharma has been a dog for quite a while, but in difficult times, sometimes money can get allocated towards that sector, and then you get a bounce back when other things are falling. So if at all I have to play the relative game, it would be Pharma. But otherwise, I think broadly, most sectors are likely to be under pressure because this is a situation of liquidity tightening around the world, which is not going to spare any particular area. Now, if someone does have an multi-asset class approach, he can have some exposure maybe to things like gold and the currency in terms of USD INR. So if you can build a long USD position, which then directly impacts gold prices in rupee terms. Maybe not in dollar terms, because in dollar terms it's possible gold prices still come under pressure when the dollar is rising. But because the rising dollar pushes up the USD INR, it actually has a positive rub-off on gold in rupee currency terms. So those are alternate asset classes to really consider in times like this, rather than just the equity asset class.
Actually, that is a viewpoint that has been echoed by a lot of other experts in the last many days, that pharma perhaps is a space that stands out. For the slightly longer term, even if this is a market that is going through some sort of a correction, for a long-term investor, would you buy into the erstwhile leaders, whether it's an Axis Bank, an M&M, an ICICI Bank? Is this a good time for long-term investors to be sort of creating a shopping basket and looking at some of these large-cap names? If yes, what tops your list now?
No, I think it's a little early to start talking about long term, because like I said, if I'm calling this, I've been calling this entire rally a bear market rally, and we're actually getting into the eye of the storm where you get a broad-based decline. I think I wouldn't want to really jump in with any big position building. I think let's give it time. Let the downward trend unfold. Let us see where support comes in. Then we'll start looking at those possibilities.
Okay, Rohit, just one final question on what you make of this defense space. We got that the proposals of all of those acquisitions approved as well, 82,000 crores. The incentive in that area continues to rise. We also have the budget, which is very close. Do you think this is a space which in an otherwise bearish market could maybe stand out?
No, I think defense as a sector is
Seen the gains?
Yeah, see, what I'm trying to say here, it's still a good sector. Okay, there's nothing wrong. Earnings are growing. There's always allocation going to be there from the government. But yes, it has had a pretty strong momentum rally. And in a broad-based decline, I want to really see it's a good testing time, right? So for sectors that have done well, when you get a market correction, you also end up getting a test of relative strength. So let us go through that test and then take a call as to what has stood out. I think that's the better way of looking at it.
Okay. All right, Rohit, thank you so much for joining us and speaking with us here. So the markets continue to see some red, and it is a 180-point decline on the Nifty as we speak. Let's slip into a short break now. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
लो एमिशन प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
मेरे पिताजी ने ना ये शेयर्स में भी इन्वेस्टमेंट किया।
PSS को फोन लगाओ।
PSS?
ये आपके फिजिकल शेयर्स को डिजिटल करते हैं।
PSS फिजिकल शेयर्स सॉल्यूशन।
जैसा नाम वैसा काम।
तुम तो मेरी रोशनी हो।
तेरी रोशनी हूं मैं, किसना?
देखो 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 नया टीवी देखो। Got the veggies from Chotu's shop? He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर।
जिंदगी को दें रफ्तार, शुरू करें इसी त्योहार, खुशियों का सफर बिताएं साथ मिलकर। त्योहार तभी हो जब अपने साथ हो। SBI के संग इस त्योहार छोटी किश्त से बड़ी खुशियां ले आए। SBI, the banker to every Indian.
Hey guys, welcome back. You're still tuned into trading. Are the mid-cap indexes where we're seeing a lot of the pain come through? It's a near 700-point cut, over 2% gone on the mid-cap index. So that is really the part which is struggling. It is also the banks which have come under pressure. But you know, the one sole spot of green in this market has to be from the pharma pack. In fact, pretty much maybe like 2 or 3 of the top 5 of top only names which are in the green right now are from the pharma pack. So if you take a look at something like a Sun Pharma, for the week, it's seen a gain of almost 8%. This at a time when, you know, the Nifty is seen cut of 2%. The Nifty Pharma index, overall also has done quite well. It's around 3% higher for the week. So this entire space is definitely standing out, but the rest of the market seems severely under pressure. But let's talk about the commodities now. We'll be back to equities in a bit. For that, we have Manisha joining us, and today she's looking at the natural gas prices. Hi, Manisha.
Well, that's one cheer that the Western world is looking at, the weaker natural gas prices there. We did see all-time highs into last year there, and prices have kept on the higher side as well. But from nearly $10 off a high, we are trading at around 5.2 right now. And for the Indian markets, we've seen a high of 720 this year. So 420 on your screens right now. So quite a bit of a profit taking. For the U.S. natural gas prices, we're trading at a 9-month lows. The U.S. inventories have seen a decline, but a decline of 87 billion cubic feet is much lower than the expectation of 93 billion cubic feet, and this is much lower than the 5-year average of around 124 billion cubic feet. That is what has led to a decline in prices. Apart from that, natural gas is used to produce electricity and for heating of houses and establishments as well. But what the phenomena is working right now is that the wind power, which is quite good, has reduced the gas usage for electricity production, and that's weighing on prices. The free plant in Texas also is going to resume its operations. Remember, that got shut in the month of June, and that resumes operations in next week. That also has brought the premium down. And much of the European prices have continued to decline as well. The Europe gas prices now are trading at a 6-month lows. And if you look at the stocks or the inventories within European Union, they are quite on the higher side. Germany's storage is at 87% of its capacity, and the overall European Union average capacity is at 83% of it totally. So there is enough stocks, enough inventories, and there is mild weather forecast for much of January, barring the storm that the marketers are expecting in UK, US, Canada, etc. from Saturday to Monday. Rest of January really is expected to see milder weather, and that's what's weighing onto the markets, where we have seen prices decline anywhere between 20 to 40% for various gas varieties. And for the year as well, it's down anywhere between 30 to 35% for 2022.
Okay, thanks a lot for that, Manisha. So that is on the commodity space, but don't lose sight of the market because there's no recovery at all up until now. In fact, if anything, it's getting worse for the Nifty, which is now down almost 180 points. It's almost a 1% slide that we're seeing on the index. So it is advantage bears today. But decadal high absorption, massive decline in inventory, sharp increase in prices across segments. These are some of the highlights from the residential real estate sector in 2022. The only worry, rising interest rates that could perhaps hit demand. Sonal wraps up the realty sector and the highlights possible risks to the upcycle. Take a look.
2022 was about a lot of things. An uptick in real estate cycle is definitely something worth highlighting. We are talking about a steep uptick in residential demand and sales. So let's look at some numbers now. Absorption in residential real estate is not 1, 2 or 3-year high, but at a decadal high. Absorption in residential real estate is basically the amount of space or units which are occupied within a market over a given period of time, typically 1 year. In calendar year 2022, so far, it is at 447 million square feet, which compares with 400 to 425 million square feet that we have seen in past couple of years. It even dipped to 281 in 2017 when the cycle was undergoing some decline. While absorption is increasing, inventories have been declining. Unsold inventory was a big pain point for developers as supply was exceeding demand. But now trends are seeing a reversal. Ready-to-move-in inventory is declining. From levels of 849 billion in 2019, it is now around 500 billion, and that is a big decline. That is for ready-to-move-in inventory, which was still more resilient than under construction. So if we look at the under construction inventory, even that has declined from calendar year 19 to calendar year 2022. Now 2019, remember, saw a massive increase in inventories. So barring Hyderabad, in the top cities, there is a decline. 23% for Mumbai, 29% for Bengaluru, 14% for Chennai, 20% for Gurugram, 4% for Delhi, 34% for Pune. Only Hyderabad saw an increase of 145% in inventories. Decline in inventories was accompanied by increase in prices. We have been speaking to a whole host of developers, and they have been of the view that passing on price hikes in the last quarter was not very difficult. So price hikes in the September quarter in some geographies have been massive. 3 to 4% in Mumbai, 14% quarter-on-quarter for Delhi NCR, 30% YOY there. Hyderabad has seen a 10% price increase. Navi Mumbai at 14% YOY, up 8% sequentially, and Chennai has seen a decline sequentially, but an increase on a YOY basis. Bengaluru and Pune have also seen moderate price hikes. This is across the industry, including organized and unorganized players. But some experts are of the view that maybe it will not be easy to pass on price hikes now, considering the massive hike in interest rates as well as the inflation. If we look at how listed players have done, strong first half of FY23, more than 100% growth in some cases. Prestige, Macrotech, Mahindra Life Spaces saw more than 100% growth. We have Godrej Properties and DLF with more than 60% growth in bookings, Oberoi at 92%, the likes of Sobha, Kolte Patil, Brigade and Suntech between 20 to 50%. So, what could the risk to this massive rally be? Definitely rising interest rates. RBI has hiked rates to 6.25% in last few policy meets. And we did ask some big real estate names, and DLF told us that demand for real estate sector was impacted when mortgage rates were at 9%, while Prestige Estates told us if mortgage rates cross 9%, it will impact real estate demand. So rate action from the RBI will be key to watch. Ending this data with some news we got some time back. This is related to commercial real estate, but only goes on to show the impact of rising rates. Blackstone and Starwood Funds Limited saw withdrawals from their real estate funds, and this was following surge of redemption requests. Big and small investors were queuing up to pull money out of real estate funds, which is a sign that yes, the surge in interest rates is threatening to impact at least the commercial property sector. These are two isolated cases, but whether it starts to have an impact on the entire sector, we'll wait and watch.
All right, very interesting explainer there on, the complete roundup of what has happened to real estate in the year gone by, that is in 2022.
That was quite some teleporting from one, tower to the other, and I thought
it's fun to watch you jumping around.
Thank God that didn't happen, but of course, interesting graphics there, and of course, our team has done a wonderful job there with the content and the way it has been put across as well.
Yeah, very interesting data as well on, how this year has really shaped up for the real estate space.
And eventually it ended with her on the billboard, which I'm sure
my mom would be happy.
The start of many such occasions, right, where Sonal's going to be on the billboard. But let's do one thing. Let's take a quick commercial break. On the other side of the break, the management of L&T Defence Business will be with us, as the Defence Acquisition Council has cleared acquisition proposals worth over 84,000 crore rupees. We'll find out what this means for their business.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, the Defence Acquisition Council has cleared acquisition proposals worth over 84,000 crore rupees with procurement worth 82,000 crore rupees to be completed through indigenous sources. Acquisitions include light tanks, naval anti-ship missiles and offshore patrol vehicles. To discuss this and what the opportunity size is, J&D Patil, who is the whole-time director and senior vice president at L&T Defence Business, is joining us now. Mr. Patil, good morning. Thank you so much for joining us. Well, from the entire basket and the acquisition and the proposals that the ministry has made, what is the opportunity for you? Which are the products that L&T Defence can participate in, and what is the proportion from this entire amount that you're looking at?
What we understand is the 24 proposals which the Defence Acquisition Council has cleared yesterday, and of those, about 10 proposals is where Larsen & Toubro would be actually making a bid. A lot of these have been something which the company has been working on, because acceptance of necessity happens at a stage when you already knew, because there's a process of RFI before this, and the ministry actually talks, the armed forces talk to industry. And during this process of RFI, all of us actually know what is likely to be happening, and at that some point in time, there's this acquisition case that gets cleared as a part of the AOA. Now, as we see, 97% is in the indigenous basket, So the first comment I probably would want to make is the government is walking its talk in terms of Atmanirbhar. This is essentially where out of the 100, which they decided to clear for the acquisition in yesterday's meeting, 97 plus is for indigenous industry.
So you said a total of 10 acquisition proposals is which you will be bidding for. Can you tell us what is the quantity? I mean, can you just define the quantum of those orders?
I would say that except for the hard weapons, bulk of the other major platform projects, and when I say platform projects, it obviously means the FICV, it means the light tank, it means the the mounted guns, which are the three very, very large projects. So in case of Navy, there are few major projects which are actually at that point on time in stage, including the vessels for the Coast Guard. The OPVs that we are hearing about, the new generation OPVs, we certainly are going to be doing that. The multi-purpose vessels, which essentially have been cleared, is for the Navy. We'll be bidding for that because we already have a contract under execution for existing multi-purpose vessels. So for Larsen & Toubro, it's an existing design. So is the case with some of the Air Force programs, and that's essentially where we already had, at some point in time in the acquisition chain, this was a formal clearance for the high power radars, which obviously we expect an order soon.
Okay. You're also saying that, okay, like you are going to be looking at 10 to 12 of these proposals. Can you tell us with this, what should your overall order book look like in the next year? If you can give us any kind of estimate on that. And also these projects that you're talking about, do you have any indication of what the timeline for these could look like, the execution timeline?
See, from the AON till the point in time we begin the delivery, that's when we start having the hard revenues in the order book.
Yes.
I mean, while the orders can come typically about 2 years from this date. What we see essentially is typically 3 to 4 years from today. And this is where the commitment of the government that, yes, we will make the budget available when this program happens. And that's the importance of the acceptance of necessity. So we can't really count big numbers in the revenues, at least for 3 to 4 years. And that's when it actually becomes into real numbers.
No, we do get that point that it's very difficult to tell us what kind of revenues you'll be getting it since the timeline is around 3 to 4 years. Can you tell us if more investments will be needed here in order to get this project going? And for that investment that you're making, any potential returns, maybe the asset turnover, or what kind of addition or opportunity will it bring in?
In fact, in case of Larsen & Toubro, we're the first company that invested 8,000 crores in 7 defense factories. So in my case, the investment is in place. What we put in place is actually going to be utilized as these orders start coming in. Because as I said, this is a business which is in pipeline. Defense is a business you start taking your early actions 5 years ahead of actually seeing the revenue and profits. Okay. And that's essentially where our investments are in place, our technologies are in place, our product development has already moved on, and we'll obviously be moving ahead. So we expect very soon, next about a year or so, we expect very sizable amount of order inflows to start beginning out of these proposals.
Okay, so sir, Mr. Patil, so you're saying that for these proposals that you've just explained, it's a 3 to 4 year execution timeline that you're looking at, right?
Absolutely.
All right, got that. Apart from the proposals that you spoke about, are there any incremental orders coming in from the government of India with respect to defense? Not just something that you could be interested in, but for the industry as a whole?
For the industry as a whole, there's a lot which is happening currently because acceptance necessity is one of those stages when things start happening. We do see multiple tank programs under development. 2 of them have been cleared yesterday. There's one more program which is going to be happening. In case of warships and submarines, we know that there are multiple very, very large programs which are there in pipeline right now. And we'll be seeing them coming to the AON, especially on the warship side of multiple of them. There will be frigates, there will be destroyers, there will be an aircraft carrier which will come on some point in time, maybe 2 3 years ahead. But it's a huge, robust pipeline we see coming in terms of time. The submarine program is very much on cards. It's right now under bidding stages. So we see large opportunity even on that side. On the airport side, we see something similar. Now, all of us as players in the industry, it's not just for Larsen to Grow. Whole lot of us will benefit very largely because current acquisition which the government is doing from the Indian industry is about 88,000 crores per year. This used to be a small number, close to about 35,000 just 5 years back. So we see a substantial enhancement over last 5 years, and we see these numbers growing typically at about 12 to 14% CAGR going forward. So the numbers we do see by 25-26 reaching somewhere close to 1.6 lakh crores.
Okay. All right, Mr. Patil, it was a pleasure speaking with you. Thank you so much for joining us and breaking this acquisition order of proposals that have been given by the Defense Ministry. So they are expecting 10 proposals to benefit the company with an execution period of around 3 to 4 years. Time for a short break now. Tata Communications is in focus as the company acquires managed services provider Switch Enterprises. We'll be joined by the management on the other side. Stay tuned.
Welcome back. Let's focus now on Tata Communications. There's news flow there where one of its subsidiaries is set to acquire a US-based video production company called Switch Enterprises for 486 crore rupees. Now, this acquisition is expected to help Tata Communications expand its footprint in Europe and North America. To discuss this and the outlook for the year, we have Dhaval Ponda, who's the Vice President and Global Head Media and Entertainment Services at Tata Communications. So Switch Enterprises is a New York-based company, and as we told you, they will be together developing high-quality immersive content, and that's what Tata Communications also put out in their statement. So let's try and get some more details. Thanks a lot for joining in, Dhaval, and greetings of the season to you. Can you tell us about this opportunity that you're going to, get from this particular acquisition? As you expand your video business, what is the incremental revenue stream that you're expecting, say, over the next 1 to 2 years?
Thank you. It's a pleasure to be here, and greetings of the season to you and viewers of the show as well. So as you know, Tata Communications operates a state-of-the-art media business where we are focused on helping sporting federation, broadcasters and OTT platforms manage their content from various sporting venues globally and helping them deliver their content to almost every single screen globally. Whether the viewer is based out of South America, North America, or parts of Asia, and from a global consumption standpoint, we have a dominant position to deliver global sports federations to over 1 billion viewers globally. What Switch brings to Tata Communications is an extended reach into majority of sporting venues in North America. So this gives us control and access to all of the content that gets produced in these sporting venues. That is one. Second is we also will inherit a very good state-of-the-art live production portfolio that will help us do not only video transmission, but also able to sort of provide production services for that live content going to the audiences. And finally, this helps us deliver an end-to-end digital media platform for majority of our customers and partners globally. What I mean by that, Rima, is that we have already invested in a state-of-the-art media edge and a media cloud platform that is video native in nature. This is one of its kind, and today it is supporting some of the most complex video workflows globally. So we do things like low latency video streaming, where you're able to watch a live sporting event, something like an IPL, FIFA World Cup, or a Formula One on an iPad screen or a mobile screen that is in sync with what you would watch on your TV screen. So complex workflows like these are already operational. They are monetized with some of the biggest OTT platforms.
Dhaval, yes, we do get that point that it is going to be an addition to the overall portfolio that you have. I wanted to understand the last known revenues for the company that you've acquired has been 675 crore rupees. What has been the historic growth rate for this business? What have the margins been? I'm asking you because whether it'll add to your current margins of the media and entertainment business?
Thank you. So I think the historical performance of the company has mainly focused around the content and the production opportunity. And we are very much excited about this segment, Rima, because this segment is what is going through an sort of a historical transformation for the industry right now. So globally, the video transmission market is approximately $4 billion, where people sort of focus on getting content from sporting venues to the screen. And the production market is actually 2x in its size at about $8 billion. And there is a transformation going in within the production environment right now as people move towards remote production and more technologically available tools to do more content with less. So what Switch has done is, in addition to the transmission portfolio, they've actually started providing production services so that going up the value chain.
Yeah,
What we are also encouraging is we'll increase the value proposition in terms of what we are providing for our end customers like sporting federations, broadcasters, and are able to add production services to video transmission.
Yeah, no, Dhaval, we get that. I'm sorry to interrupt. It's just that we're running a little bit short on time. I'm just trying to understand, you know, that what has the growth rate for Switch been like? If you could take us through that. And also, you said this acquisition will be complete in the next 4 to 6 months. What is the revenue contribution that we can see from this, from Switch? What is the kind of revenue that you're expecting because of this acquisition?
Got it. So the growth rate for the business historically has been very good in double digits, especially for the digital businesses and the production businesses that they have been operating for the market. They've also seen, and we as a company have also seen longevity of deals when we are into the digital market for the broadcasters, where we are able to provide additional sort of value-added services to these customers. Secondly, we expect to sort of close this transaction in the next 4 to 6 months. So we are able to bring the production portfolio to the same sort of set of customers like global sporting federations like Formula One, MotoGP, golfing and tennis championships globally, and are able to provide digital services on our own digital media platform for this market.
Okay, just a couple of final questions before we end. One of the other group companies, Tata Technology, is looking to do an IPO as well. Is there any kind of business or financial overlap that you see?
So I would not want to comment on specific aspects of sort of other group companies. What I would like to say is today is probably one of the golden eras for content consumption. Globally, content consumption is more than 50 hours per week. So the problem at hand over here is within this content consumption pipeline, live sports continues to be the most premium form of content. And people are spending more than $85 billion to acquire market rights and sports rights globally. So with this amount of money at stake, people are definitely interested. How can we monetize this content better? How can we improve at home and at venue fan engagement? So the opportunity is immense. And if you think about it, this is the biggest example of how content is being the single lowest common denominator, whether you are in South America or whether you are in a sort of an urban city. The content consumption patterns are universal. So the opportunity to help every single organization in this value chain either produce content, deliver content, or monetize content is absolutely immense for us right now.
Dhaval, thank you so much for joining us and taking us through what the rationale for this acquisition is and the outlook on the content creation industry as well. We'll slip into a short break now. Up next, we'll discuss the way forward for the markets with Sunil Subramaniam of Sundaram Mutual Fund. Stay tuned.
Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's still a 1.4% cut that we are seeing on the headline index. So 250 points gone over there. That is what we're seeing on the Nifty. The mid-cap index is seeing losses widen yet again. So, I mean, it's 900 points lower and 3% gone on the mid-cap index. That is where a bunch of the pain is coming through. Let's actually get a market guest in to help make sense of all of this. Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund, joins us now. Mr. Subramaniam, good morning. Thank you very much for joining us. This is Pavitra. And clearly no signs of Santa Claus, right? I mean, on our market. So, and we have for the past week or a couple of weeks been moving to everything that's happening globally with no major cues really coming through, I guess, you know, up until the earnings season starts. How do you think it's going to move from here? Do you think it's going to be very range bound?
it will be range bound till the new year because remember, India's only few markets which have done better than the global markets. So year-end return is still positive. So because of that, profit booking by hedge funds and FIIs tends to happen during the December period, right? So that's why you will see a little bit of selling, especially where they have made the most gains. So you see segments like PSU banks, realty, those which had run up a lot in the past few weeks and months, with their profit booking. So I see this as a profit booking. Second is, like you said, the lack of direction, but I'll add to it the potential fear around the resurgence of COVID and how that's going to get managed. It's coming in pockets in various parts of the world. So market would like to wait and watch that. The third thing, yes, earnings season you mentioned, but also I think a big union budget is coming up for India on 1st February. So the noises around that are also going to mean that trying to second guess the numbers for the year and how Madam is going to spend the money. As you know, the first half year, the income for the government has been far better, almost double of what was projected. So there is room within the fiscal for the second half of the year and for next year to lay out an expenditure plan. And I think that's what is going to be a key driver for the market going forward. So I would say yes, till the budget itself, I would expect a period of sideways movement and consolidation.
Okay, what about individual sectors? There is the IT space that comes out with its earnings. I think TCS is on the 8th, followed by Infosys on the 12th of Jan. So we won't have to wait too long. But are you expecting any incremental weakness in earnings, and what is the prognosis now?
No, I wouldn't expect, because two things. This is the festival season's full impact going to be disclosed in the earnings. That's number one. Number two, the previous quarter, you had an impact of the commodity prices rise impacting margins, right? Right up to June. And then from July onwards, you've seen commodity prices easing. So I think that there will be a positive impact on margins. Numbers on the festival top line look good. How the bottom line translates. So I think there will be a sense of optimism around the numbers rather than a sense of weakness. But the more important point is the commentary on the future. I think this earnings season is also important to see how, especially the export-oriented sectors like IT and pharma, what are they saying about their order book? What are they saying about their customers in terms of their business for the rest of the year? That I think will provide clear direction to the market. So the emphasis would be equally on the guidance given going forward for the rest of the year as to the actual results for the quarter.
Okay, so that's about the IT space. One space that is doing well in a weak market like today is the pharma sector. That's the only index which is in the green. What is the outlook on pharma space? While IT continues to underperform, the other defensive sector that people usually look at is pharma. Do you think this outperformance will continue?
That's the answer to the lies in COVID. The fears for COVID and then the anticipation that, you know, pharma and diagnostic companies would have a lot more business is, I think, getting factored in. Otherwise, if you see, pharma is an export-oriented sector, and like IT, a global recession should negatively impact pharma growth. So I would say this is a short-term rally in pharma, and unless COVID wave goes stronger, then again, obviously, pharma will get buying support. So I think if we are able to tackle COVID properly, pharma should come back. So this is, I would view the pharma bounce back as more of a short-term phenomenon rather than as a sustainable, growth in that sector for the next year.
Okay, got that. Another space that I'm seeing, which is one of your top sector picks, is the auto space. How do you look at this space, and what do you like within it? Because there's do you approach it with the two-wheelers, the EV play? Are you looking at the standard CVs? What do you like within the auto pack?
I think CVs are showing a good sharp up move because of the capex cycle reviving. You're seeing lots of announcements around private sector capex reviving in addition to the PLI and the government capex. So the logistics, movement of goods and transportation, right, is going to pick up tremendously. And I would say that the entire CV space, MHCV, light heavy commercial vehicle, all of that should see a big good cyclical recovery. So that's our top pick. The second, I would say, is that the good crop for Kharif and expectation Rabi would mean rural demand. I would favor the two-wheeler sector. So currently the market is not reflecting that. I would expect rural demand to drive two-wheeler growth significantly. On the EV side, I think the market is playing valuations on EV side. I don't see demand for EVs as being so critical now, but EV infrastructure is a key play. So those companies, auto companies which are investing in EV and the supplies to them are a key part of our value proposition.
All right. Well, the market seems to be in a free fall mode right now. The Nifty is down 257 points. The Sensex is down over 800 points, and this is not a small cut by any means. I mean, just look at that. At the lowest point of trade, given up on all key levels, whether it was 18,000, 17,900 is gone now, and the Sensex is just sitting at 60,000 by the skin of its teeth. It's holding on to it. So at any point in time, I think a 60,000 level would also be breached. Sunil, just a quick comment from your end. Is this a time to raise cash levels, or do you think that, one shouldn't panic?
One shouldn't panic. I'll tell you why. Because if you look at the fact that between COVID and September of 2021, almost 3 lakh crores of FII money came in. Between October to June, 2.5 lakh crores of that money went out. But from July to now, only about 90,000 crores has come back. So the Indian market has the capacity to sustain 2.5 to 3 lakh crores of FII flows. 90,000 crores only has come in. There's 1.5 lakh crores of FII flows waiting. And this correction is because one of the things which was worrying people was that markets are rising when world is kind of slowing down. And so the valuations and everything was being questioned. This correction, I think, gives a kind of a breath. And I would say this correction is a bull market correction in our thing, and not a bear market rally that happened in the past few months. So from that point of view, I think this letting off of steam by the market, what's happening this week, is very good because it'll encourage FII flows back again. But the key factor to track, and which we haven't talked about yet, is the oil prices outlook. I think for FII money to come back to India, there has to be clarity around the oil prices, which have to show a declining trend. Today, the fact that the US decision on a price cap has diverted European buying to Saudi Arabia and OPEC countries means that oil prices are not dropping as much. Second is the winter season is on in the Western world. So come February, March, you will see both the winter give way to spring and summer, and you will start seeing the rate hike impact on the slowdown start coming in more, and so oil demand should come down, and there would be a clarity around the oil dropping from its current level to the 70s and the 60s. Then I would say FII flows would come back really strongly. So the quantum of FII flows waiting on the sidelines, I think, is the biggest positive for the Indian markets, and which should sustain it in the year 2023.
Point taken. Sunil, thank you so much for joining us and giving that expert advice on the market moves and the outlook going forward as well. Time for a short break. We'll get you more on the market on the other side. Stay tuned. Welcome back. Well, the mid-cap index has turned negative for the year, so a lot of pressure that we are seeing in the broader markets. Nifty down 250 points as we speak at the day's low. Across the board, there's selling that we are seeing. Reliance Industries has also fallen, and that's a big weight, which is putting a lot of pressure on the Nifty right now. Bank Nifty too down 1.3%. So clearly, it is a day for the bears, and let's see whether that continues or not. But for now, yes, it is in definite grip of the bears right now. And with that, it's a wrap on this edition of Trading Hour. Wishing all our viewers a Merry Christmas from the team of Trading Hour. Stay tuned. HTR, that is Halftime Report, will come up next.